Today, I'd like to talk to you about teaching your kids about borrowing and credit. It's important to teach these concepts as they're going to need this information in adulthood. So here are some tips on how to get that conversation going in a fun and engaging way. First, start with the borrowing basics, meaning define what borrowing means. It's basically when you accept a loan of money from someone else with the promise to pay it back later on. Examples of borrowing could be things like taking out a loan or even borrowing money from a friend. Next, let's explain interest, because when you borrow money, you usually have to pay interest on top of the amount that you borrow. Interest is simply the cost of borrowing money and can add up quickly if you're not careful. Teach responsible borrowing. Only borrow what you can afford to pay back and shop around for the best interest rates. Second, let's give them a crash course in credit. Start with defining credit, which is your ability to borrow money based on your credit history and credit score. Okay, so then explain what a credit score is, which is a number that represents your credit worthiness and is calculated based on factors such as your payment history, credit utilization, and your length of credit history. Next, let's talk about the importance of good credit, because we know that building good credit is important because it affects your ability to get approved for loans, credit cards, or even jobs. Next, teach them the responsible credit usage, meaning pay those bills on time and keep those credit balances low. So some final tips that I have: make it fun and age appropriate. The younger the children, consider playing money games or even giving them an allowance to teach them the value of money. As they get a little bit older, explain how credit cards work and set limits on their use. Explain the consequences, meaning talk to them about what happens when you overspend and how crucial it is to pay bills on time. You see, teaching kids about borrowing and credit is an important part of raising financially responsible kids. And by introducing these concepts early on, parents can set their children up for a lifetime of financial success and a good credit score.